What is a corporate bond spread, and what does this mean?
Okay, so we pay attention to the spread, what we're paying for different types of bonds. So the safest bond is going to be issued by the U.S. government, right? Because if the government fails, we've got bigger problems, right? So U.S. treasuries are the safest. So you get the lowest yield, right? Because it's the safest investment. So then typically we see about 150 to 200 basis point, 1.5% to 2% more interest. So in other words, you're taking a little risk now. It's a private company versus the U.S. government, so you get paid a little bit more for your investment buying the bond. And then high yield would be another 250 basis points higher than that. Well, we've seen the spreads collapse. So right now, corporate bonds and U.S. treasuries are basically paying roughly the same, a very thin spread. When that occurs historically, and that's what the chart that we're showing for the YouTube viewers, that is usually a bad sign. In other words, no one is willing to take on the risk to buy corporate debt and the yields are just fading there, or the government is overspending and you're not getting it's not as safe. So if it's no safer than the corporate bond, why are you buying it if you're getting a slightly less yield? So this is a precursor and usually tells us that a recession is right around the corner. And if you look historically on the chart, when the spreads thinned down, what occurred right after that? Well, we've typically had some significant pullbacks in the market if you go look historically.